Okay, hi guys. I hope you all are doing well. So, welcome to this third day of the performance management live revision sessions. We have had 2 days in which we have gone through the different areas, including the variance analysis and including the decision making. That's what we have covered till now. We're going to move forward, and today I've actually planned to go about with the performance management. So we would inshallah be doing the performance management. That's what our agenda is going to be for today's session. So with respect to this performance management, with respect to performance management, let's just try to see this. Basically, we have done some questions, and now I would actually want to go ahead and discuss the questions pertaining to performance management. Okay, now there is this one question, the name of which is MedComp. The question is from March, June 2021. What is the requirement of the question? It says for each of the perspective of the balance scorecard, select the appropriate critical success factor which relates to the perspective. Suggest one KPI. Suggest one KPI which will help to measure the CSF and use the KPI to analyze Medcom's performance from 2006 to 2008. That's what you have to do. You have to use the performance of Medcom you have to use the KPI to analyze the performance of Medcom from 2006 to 2008. Okay, let's just start off. So basically, this is what you have to do. It's a 16 mark requirement. And then we have got the next requirement, which we are going to talk about again. And that is going to be explain the benefits of an organization using the balance scorecard to measure performance instead of using solely financial measures. So I would actually want to go about with the first requirement first, and then we would move a bit forward. So first of all, can you just read through the question? Can you just read through the question? Then we could start discussing further. Okay, kindly read through this area also, the remaining part of the question also. Okay, let's start off. So it says MedComp is a charity based in Sealand. It provides medical treatment to prevent and cure blindness caused by the cataracts to thousands of people in less developed countries. This disease is relatively easy to cure when the treatment is available, but the majority of the people who need treatment cannot afford to pay for it. So it's like majority of the people who need treatment they cannot afford. For over 10 years, Medcom has provided free treatment from 12 treatment centers based in fixed locations worldwide. So they do provide the free treatments from the different treatment centers which are located worldwide. Medcom employs a small number of paid permanent staff, a small number of paid permanent staff who consists of medical practitioners, medical administrators, and fundraisers. But the majority of its workforce is voluntary. So the majority of the workforce is what? Voluntary. The charity has built relationships with several teaching hospitals in Sealand, from where it recruits newly qualified doctors and nurses. These doctors and nurses volunteer to work unpaid for a year in Medcom's treatment centers before returning home to work in one of the Sealands hospital. Medcom believes that using a newly qualified medical staff will promote the use of most effective and up-to-date technique procedures. Financial donations are sourced. Financial donations are sourced from a large businesses in Sealand, and most of the equipment and other medical supplies needed are donated by hospitals and manufacturers. Thus, it is rare for the treatment centers to run short of supplies. Thus, it is very rare for the treatment centers to run short of the supplies. Now, what next is this? Next is basically Medcom keeps accounts with a year end of 31st August as well as detailed operating data. Data extracts from its management accounts for the current year of 2006, 2007, 8, etc., are as follows. So 8, 7, and 6, the average size of donation, number of donations, total operating costs, new procedures as a percentage of total so and so, so on. It says Medcomp is about to introduce a balance scorecard to implement the strategy and performance measures. The critical success factors which relate to the four perspectives of the balance scorecard have been identified as positive cash flows, innovation, medical effectiveness, and functional efficiency. Now let's try to understand this thing that it says for each of the perspective, select the appropriate critical success factors. They've already given these critical success factors. You have to choose which one of them is going to be relevant. You have to choose which one of them is going to be relevant for which of the different perspectives. I repeat, you have to choose which one of them is going to be relevant for which of the perspectives. Then it says, which relates to suggest one KPI which will help to measure CSF and the use the KPI to analyze Medcom's performance. Okay, for 2006, 7, and 8. Now let me just guide you people through that. How would we do that? There are four perspectives when it comes to this balance scorecard. What are those four perspectives? One of them is a financial perspective. The second one of them is a customer perspective. Third one of them is internal business process, and the fourth one of them is learning and growth perspective, right? So these are the four perspectives: the financial, the customer, internal business, and fourthly, the learning and growth perspective. Hmm. Now, how are things gonna be? Let's try to understand. So we have got four critical success factors. What is a critical success factors? These are those things which you have to do in order to ensure that you are able to achieve your mission. Which you have to do in order to make sure that you are able to achieve your mission. So it says positive cash flows, innovation, medical effectiveness, and functional efficiency. So obviously the critical success factors for the financial is gonna be the positive cash flows. That is what the answer is gonna be for the financial. And then we have got the other two, the customer perspective. What is the customer perspective gonna be? That is the medical effectiveness. The customers, they are coming to you, why? To get cured. To get cured. And the customers would be happy if you would actually cure them. So that's medical effectiveness. With respect to internal business process, that's functional efficiency. Each of the department, each of the functions should perform efficiently. That's what it should be. Then the learning and growth CSF is gonna be what? Is gonna be the innovation. Innovation is gonna be the learning and growth CSF. Now, if we talk about the different type of, if we talk about the different type of um, okay. Now, so basically what happens is that positive cash flow, then etc. Now we need to establish the KPIs. We have got average size of donation is there, the number of donations is there, total operating cost is there, new procedure as a percentage of total procedures, number of treatments performed, number of successful treatment, average number of days taken to deliver drugs and equipment, and so on. So now, how would you make sure the positive cash flows? The KPI is gonna be what? Total donations less total operating cost. Or you could simply say net profit, which is calculated as total donations less total operating cost. Right now, so what would you do? You would actually do the performance analysis here. You would say donation 2000x6, 2000x7, 2000x8 is gonna be 500 multiplied by 2950 is equivalent to, you got to have the calculators. It's also given in here also. So just use the calculator in here. 500 is gonna be 500 multiplied 2950 is 1475 triple zero. Then you have got what? You have got 535 and 3000 is 1605 triple zero. And then what happens is that 600 into 2850. One seven one zero triple zero. 1710 triple zero. Now if you move a bit forward and if we talk further, so you can have the total operating cost also. Total operating cost here is actually gonna be 1430 triple zero 1550 triple zero 1730 triple zero. So your net profit is going to be total donations less total operating cost. It's actually gonna be 2000x6, 2000x7, 2000x8. 1475 less 1430 is equivalent to, just a second. It's gonna be 45,000. What is it gonna be? It's gonna be 45,000. Then for the next year, it is like 1605 less 1550 is equivalent to 55,000. And then it is actually gonna be 1710 less 1730 is equivalent to negative 20,000. So basically, what you need to do, you have to say that, in fact, I would actually net profit margin, which is the total donations divided by NP margin for 2000x6, 2000x7, 2000x8 is gonna be 45 divided by 1475 is equivalent to 55 divided by 1550 is equivalent to negative 20 divided by 1710. Okay. Then what you would do is that you would do this calculation and you would comment on it. Based on the computation of the net profit margin, the margin increased from 3.05% to 3.55% in the year to 2000x7, suggesting that the positive cash flows would have been generated for the business. However, in 2000x8, there is a loss of 20,000, suggesting that the performance has declined over time and that Medcomp has not been able to manage the cash well. So see, what is going to happen is that you're going to write down the answers to each one of these questions. And the way to write down the answers are going to be like this. The way to write down the answers is going to be like this. You get my point? Now, so what I'll just do is that I will just now do the calculations for the next one, which is the customer medical effectiveness. What should be the KPI based on the available information? Yeah, what should be the KPI? Yeah, any suggestions? What should be the KPI for this? Okay, yes, so number of treatments performed, number of successful treatments. So you could simply say the percentage of successful treatments. Let me just see one thing from the question. Select the appropriate criteria and suggest one KPI. Right? Okay. So again, um, 2000 x 6, 2000 x 7, 2000 x 8. So it's like gonna be 4002 divided by 4600 is equivalent to 87%. It's gonna be 4300 divided by 5000 is 86%. 77%. So if we talk about it, what is it that we are gonna see? We're gonna see this, that on the basis of the percentage of the successful treatments established, it can be seen that the level of satisfaction and success, the level of satisfaction and the success, just a second. Suggesting that Medcom's quality is deteriorating over time. You get my point? So this is what you have to do. You have to actually do the calculations and you have to perform, you have to suggest them. Now see, the examiner does this thing, he does not give you an Excel at times, and he just gives you a word processing document, and he's expecting you to do things on the basis of word processing document. So you have to be ready for that also. right? Okay, let's move a bit forward and let's discuss further. So then there is this functional efficiency. What should be the KPI for this? So based on the available information, a percentage of procedures carried out, how would you calculate that? Okay, average number of days taken to deliver drugs and equipment to treatment centers. This is one of the functions of them that they have to deliver the things to there. So performance analysis is that the performance has been consistent over time as the number of days taken to deliver drugs has been 7 days till now. This suggests that entity has been able to manage its delivery time. Then we have got the last one, which is basically about the innovation. So there was this new procedure as a percentage of total procedure. So number of new procedures 2000x6, 2000x7, 2000x8. For 2000x6, it's gonna be 4600 into 5%, 5000 into 5%, 5600 into 20%, 230, 250, 1120. The newly introduced procedures performed during the year 2006 were 230. They increased to 250 in 2000x7, and then there was a significant increase in 2000x8 to 1120. This is suggesting that Metcom is actively pursuing strategies to undertake new procedures, to undertake new procedures. right? Okay, so this is how you would do it. Now, what is the next requirement? It says explain the benefits of organization using the balance scorecard to measure performance instead of using solely financial measures. I'm just writing down bullet. Obviously, you can just elaborate them. So, multiple, all aspects of performance cannot be covered in financial statements. Therefore, non-financial aspect is covered. Therefore, non-financial aspect is covered. Multiple dimensions, including customers, innovation, business efficiency, all are covered, gives more room for improvement for the organization. So now what you would have to do is that you would have to explain each one of them. So do you understand this? Yeah, do you understand this? Do you all understand this? Right? Okay, so we are done with this question now, and we are now going to move a bit forward and we'll talk about another question on this uh, performance measurement. So, like the current question was, wait a bit. The current question was from March, June 2021. Now we're gonna move to the next paper. I would move on to September 2021. September, December 2021. Okay. Um, this paper has got two questions. One of them is about the decision making also. I'll just see if I can just get some time to do this question also. But anyways, let me just move on to the performance management area. Okay. Following scenario relates to two requirements. Analyze the financial performance of the two airlines, including reasons for the differences in the business performances. So this is what you have. I will just zoom out a bit. Can you just look at it? Yeah, take 2 or 3 minutes, try to look at it, then I'll move forward. Okay, so now when you have actually seen this, you can now have a bit of an idea as to what is actually going on. See, the questions requirement was again analyze financial performance of two airlines, including reasons for the difference in two businesses' performances. So what does it say? Country of J-Land has two airlines, the flag company, which is its national airline, and budget company, a recent entrant into the market. Flag company was government owned until 10 years ago, but is now operated as a private company. Its mission is to be the airline of choice for long distance traveler. Its mission is to be the airline of choice for long distance travelers. So their main focus is long distance routes, long travels. That's what they're it charges premium fares and operates routes from J-Land's capital city to the major airports, serving the largest cities around the world. Many of its flights have durations greater than 12 hours. So the passengers, they prefer to actually pay more because they are traveling for a longer duration and they want their travel to be convenient. The majority of its passengers are traveling on business and are prepared to pay high prices. However, the demand for business travel is sensitive to economic conditions. Its fleet of aircraft is regarded as aging by industry analysts. So what's happening is that their fleet is actually aging. It's like growing old. Now what else is there? So it says that budget company was founded by a wealthy entrepreneur who invested their personal fortune in the company's equity. Its mission is to be the lowest fare airline on any route we serve. So there is basically a clear difference in the objective and the goals of both the airline. One wants to be a premium airline and one wants to be a budget airline. It offers flight to destinations up to 3 hours travel from J-Land. So it's like one of them is traveling up to 12 hours, one of them is traveling up to 3 hours. In fact, traveling more than 12 hours. It offers flight to destinations up to 3 hours, so and so, so and so, and generally less than 2 years old are the aircraft. Most of its passengers are holiday makers, and demand for its flights to be relatively insensitive to economic conditions. Following information is available for both companies. Now, see, the major differences between them is that the flag company, it's like premium pricing, long distance, business customers, subject to economic conditions, fleet is aging, major airports. Whereas when it comes to the budget company, what is the budget company doing? Now, with respect to budget company, the concept of budget company is that it basically has got a situation where lowest fare airline, multiple routes, short distance, new aircrafts, leisure travel, things like that, right? Okay. Now, what is it that you have to do? You've been given the revenue, operating profit, etc., etc. So what are you gonna measure? You're gonna measure this. You're gonna say operating profit margin, which is operating profit divided by sales. Profit margin, which is gonna be the profit before tax divided by sales. return on capital employed, which is going to be operating profit divided by total assets minus current liability. Then it says aviation fuel liters consumed, available seat kilometers, passenger seat kilometers, operating gearing. Operational gearing is telling you the business risk. Idle capacity. Okay, you could say capacity utilization is gonna be passenger seat kilometer divided by average divided by available seat kilometer. Fuel liters per available seat kilometers per fuel liter. This is what you would do, and this is what you would calculate. So your commenting would actually be based upon how you see the differences here. Can you think of any other way of measuring it? Yeah, is that okay? Acid test ratio. Yeah. Okay, you could talk about the current ratio, working capital investment also. Now, whole of it is like the main objective of all of this should be that we need to make sure that we are able to calculate these and comment on the company's performance. Now, what next? Briefly explain how building block model could be used to manage performance of a service business. Now, see what happens is that the building block model has three blocks. Number one of them is dimensions block, standards block, and the third one of them is rewards block. So I've got dimensions block, standards block, and the reward block. What is this dimensions block? It's like these are the dimensions which will be used to measure the performance of the company. Profitability, market share, quality of service, flexibility, resource utilization, efficiency. Ownership, achievability, equity. So what you need to do is that ownership, achievability, and the equity. And the last thing is that about the rewards block. What is the rewards block going to be? Rewards block is going to be controllability, motivating, and lastly, clarity, right? So now, what would happen is that the building block model requires entity to measure the performance using the factors mentioned in the dimensions block. While measuring the performance, care should be taken that the performance measurement should meet the standards of the ownership, achievability, and equity. The rewards block suggests that the performance should be rewarded by the rewards which are which are clearly defined, motivating, and based upon controllable factors and based upon controllable factors. right? Okay, so we are done with this specific question also. Okay, now I would suggest you people to actually do the questions on this, what do we call? Performance management, and do the questions of the latest two exam attempt, December 23, and the attempt before that. Let me just guide you that which attempt it was tested, March, June 23. So it's like March, June 23 and December 23. Try to do these two questions for the performance management and try to submit your answers to me. So I would want to review and would want to get back to you on them. Right. So thank you very much, guys. Thank you for your time. Thank you for being here. It was glad to see you all here. See you again tomorrow, inshallah.